Hey everyone, today is Friday, August 5th. My name is Rafi Barajan, currency analyst at xm.com, here to provide you with your Forex news update. The dollar lost some ground in Asian trading on Friday as investors turned cautious ahead of the US jobs report later today. Non-farm payrolls will likely have eased in July from the strong surge seen in June, but are still expected to come in at a healthy pace of 180,000. A solid jobs report is seen as keeping the door open for a rate hike later in the year, which would support the dollar. But in the meantime, the dollar was struggling to hold on to the 101 level against the yen in Asian trading today, while the euro firmed to $1.1143. The single currency shrugged off weaker than expected German industrial orders out today. Industrial orders in Germany declined by 0.4% month-on-month in June, missing estimates of a 0.6% rise. European equities were boosted yesterday after the Bank of England surprised markets with a bigger than expected stimulus. London's FTSE 100 share index closed up 1.6%, but Asian shares lost earlier gains in late session today. The pound was steadier on Friday following yesterday's sledgehammer response by the Bank of England to kickstart the UK economy in the aftermath of the Brexit shock. The Bank of England cut interest rates for the first time in over 7 years and restarted its QE program, as well as launched a corporate bond buying scheme. Sterling briefly slipped just below $1.31 but had firmed to 1.3127 in late Asian session today. The Bank of England stimulus lifted commodities such as oil and gold. Crude oil prices rallied by over 2.5% yesterday, but fell back by 0.7% in today's Asian session. WTI oil futures were last trading at $41.72 a barrel. Gold prices extended their gains on Friday though, climbing to $1,364 an ounce. Stronger commodity prices helped currencies such as the Australian dollar advance against the greenback on Friday. The Aussie was firmer at 0.7653 despite a dovish statement by the RBA. In its quarterly monetary policy statement, the RBA said core inflation will likely remain below its target for the next 2 years, paving the way for further rate cuts. Coming up later today, Canadian and US employment data will dominate the day, but also to watch are the latest Baker Hughes oil rig count for the US. Thank you very much for watching and have a great day.